Greetings, traders, and thanks for joining with us today for our bi-weekly Boomerang training session. I'm sure there's lots on your minds with all the things coming up with the so-called Brexit situation and all that, and we got the slower summer volume and all that, so I'll go over all that today. Before we get started, please read the disclaimer posted above here to show you that you must be aware of the risks and be willing to accept them in order to invest in the futures and options markets. These are high-risk markets, and you should just be aware that you should have plenty of money to trade. This is a business for people who are well off financially, and you shouldn't be trying to trade to pay your rent or mortgage with your last few $1,000s. It's not going to work out very well if you try to do that. We don't encourage it at all, although we do specialize in working with smaller traders. The Boomerang day trading system is designed for traders of all different levels. We have traders trading huge size, we have traders trading one lots, and our average regular member is building up to about 4 to 6 contracts with a $5,000 to $7,000 account, which is a real nice way. Now, of course, another issue that we need to talk about is because of all the Brexit hype, the current margin for example, the mini NASDAQ, I'm not sure exactly in crude oil, I just know in a general sense that the margins have been increased by about 100%. In other words, what you normally they have listed as the regular margin to hold a trade overnight, that's now being required to hold your account open to trade per contract on an intraday basis. So that's a substantial increase. For example, a lot of firms will take $500 intraday to trade one mini NASDAQ contract, but the actual NASDAQ margin, I think, is somewhere around $3,300 or so. So depending on your firm, I know the firm that I day trade with has not raised my margins yet. Maybe tomorrow they officially will. I don't know. Or maybe they're on a wait-and-see program. Each individual FCM, it's up to them, but I know a lot of them, such as Global Futures and Ninja Trader and others, have suggested that those intraday margins are going to be substantially higher, and that's because of all the hype and the fear about the Brexit thing. So just check with your broker. If you go click on your platform and it doesn't give you a trade, that's because the margin's been raised and you have to adjust the amount of contracts you trade accordingly. So again, call your broker on that. Now, first of all, speaking of that, I wanted to get the margin thing out of the way so you could really understand and be aware of that. Just call your broker and they can explain to you what the current limits for your account are and everything. The thing is that since June 14th, the Pan-European stocks, the STOXX 600 index, which is European stock index, has surged 6%. That's a pretty big move in a single week. And the London FTSE 100 index has surged 5% in 1 week. That's, about a week. That's a pretty big move. So usually ahead of a really hyped out deal like this Brexit thing has, that seems to be a bet that the big money or the equity traders or the big players are betting that there are going to be further gains ahead. In other words, that the Brexit thing is not going to happen. Now, many of you who may be visiting us today in our webinar, and I know we have a lot of you who are indeed from Europe, or in particularly England, may not favor that. So I'm not making a political statement about what I think. I'm just telling you that it's kind of unusual for the market the week ahead of such a big event to surge 5%, 5 to 6%. That's a very big move to happen before such a well-publicized event. So just keep that in mind. Also, the betting sites, which often, oddly, can be very good forecasters of future prices on stuff, the betting companies are showing about a 76% chance that the Brexit thing will not occur. That, in other words, England will stay within the European Union. I personally, I don't know. I haven't really studied this thing that intensely, to be honest with you. But those two factors are kind of interesting, and oddly they both agree. How the market surged before this big event, and that um, the betting sites are betting 76% in favor of England not exiting the European Union. Now, one other third thing, which is a little bit conspiratorial in nature, is that George Soros came in and has been hyping that there's going to be this big drop because of the Brexit thing and all that. Now, remember, this guy is a real creep and a real sly person who doesn't care about anybody but himself. So, to come out of so-called retirement, we know he hasn't been retired at all. He's been manipulating all kinds of political things and all that. But the point is that for him to come out of so-called hibernation and all of a sudden declare a big giant drop in the European markets because of this, maybe he's trying to get prices down because he's actually on the buy side, or he's created a large put spread or something like that. Hard to say, but keep that in mind. This guy is not an honest person at all, and it might be just part of the hype. Anyway, he'll have to answer for that if the markets do indeed rally. He'll have to come out and say, "Oh, gee, I lost on that one. Oh well, gosh, golly gee, shucks," or something. I don't know what'll happen. Anyway, just keep in mind there's kind of three factors that are betting for Europe staying in the European Union. But the future will tell us, and that future will probably be by officially here in the United States by Monday morning. We should know, or Friday morning. We should know when the markets open up. So keep in mind, just be willing to stand aside in your trading a little more. The last 2 days we've had the Fed in a testimony. Fed testimony going on, and I've made you aware of this. We have a special video that I've made for all our members that's under the resource section where I tell you that you should absolutely know how to do your job in this futures business, trading these indexes. And one of those things is to check the economic calendar every day. If you're trading the U.S. stock indexes like the NASDAQ, ES, YM, whatever, Russell 2000, please check the economic calendar every day and see what the heck's going on. You can see right here, Janet Yellen speaks. Janet Yellen speaks. If you click on that, you see that yesterday she was in a semi-annual testimony before the Senate Banking Committee, which always stagnates the markets and makes less trades because the market gets real choppy and slow. The range shrink usually, and it gets very stagnant. Maybe she'll say something in the midst of that, which usually she doesn't, because she's very guarded in her answers to the committee. Here's the next day. This was today, the semi-annual testimony for the House Financial Services Committee. So generally her response are very guarded and everything because she knows these people are looking for dirt on her generally, or trying to have answers for their constituents about why things aren't the way somebody thinks they should be. You know how that goes. But check the economic calendar. And always be aware of these events that are going on that can stagnate the market. Every day is not the same in the markets. In fact, the exact opposite. Every day in the markets is completely different. Every hour is actually different when you're trading these stock indexes on these lower time frames. And we'll go over that in a second here. But so keep that in mind. The Brexit thing probably isn't going to happen. Maybe it will, maybe it won't. But odds do favor, so far it appears, that they will stay in the European Union. What I'm going to do now, I've got a boomerang chart here with the the NQ, my favorite contract to trade, the futures, the NQ in here, and I'm just going to scroll back a bunch of days here. Let's get it to scroll back, and we'll go over some of the trade setups and everything. Now, keep in mind that your default place to go for information on Boomerang Day Trader, if you're brand new and just joining us now trying to find out what this is all about and how we have the audacity to guarantee 90% winning trades on Boomerang Day Trader, you can learn all about that here on the Boomerang blog at boomerangtrader.com. Now, if you go here, you'll see the blog section is where we post all the information about our training sessions, and then when I make a recording like we are today, I put the recording up there as well so you can watch that to review everything. So we give you a good opportunity to do a lot of research and review everything I talk about here and make notes, make a lot of notes, and really become a top professional U.S. stock index trader so you can get your income way up there and work out of your home every day and change your life in that sense. If you go under the resource section here, you'll read about my latest Boomerang trend trading method, which will add a couple trades, usually a day, to your arsenal of trades. How to deal with, like we're seeing the last 2 days. You got the Brexit thing coming up. The last 2 days we've had this Fed testimonial. What do you think? It's going to be a tighter range, a congested market, and more whipsaw. Just watch this video on how to manage congested areas and whipsaw in the market. Scrolling down, here's a bunker method, which is what you're going to want to apply when the market does get a little bit too crazy. Like tomorrow, I wouldn't trade tomorrow, but if you want to trade, go ahead, but just use the bunker method. Be very careful. This is a safer, or safest, shall I say, approach to using Boomerang day trader to trade the markets. But here is a two-trade method for trading the markets, and then you simply add to that these additional 1 or 2 trades that'll usually happen in a day to the Boomerang trend trading method. Now I'll go over those as I go over all the different trades. Scrolling back here to, what do we got? Let me see what this date says here. This chart, because it just kind of starts here, I don't want to get, okay, here's where they're opening right around here, just a little after that because the chart ends there. This is 6-2. And today's the 22nd, so about 20 sessions ago, well, not 20 sessions, but 20 days ago, which I'd have to count. It's about 15, 16 sessions. Okay, so I'm going to go over the setups. Now, the way Boomerang works, it's so simple. Anybody can learn it, even a brand new trader, once you get a little bit accustomed to the futures market and all that. All we're doing is we're waiting for an arrow for a new buy channel or a sell channel to open. Once the channel opens up, the arrow opens up and that candle closes, and we use a 450 tick chart, which is a default reading that we use for trading with Boomerang. I found it to be the best of all because it's kind of a hybrid combination of like a 1 minute and a 3 minute chart. So a little slightly higher time frame, but by using what ticks are going off, it tends to skew the candles a little towards what's actually going on in the market as opposed to just drawing a candle based on what happened over the last 1 minute or 2 minutes. You can put in a tick meter here, and it'll show you how many ticks are left. So when that tick meter goes to 0, and that candle closes with that arrow and the channel locking down, you merely look over at the dynamic trend bands, which are these 2 colored bands here. The dashed dotted one is the dynamic trend band number 1, and number 2 is the thicker solid line here. The magenta color or reddish color is bearish, and the bluish color or azul color is bullish. Then all we do is we wait and we trade a pullback, the earliest pullback to the signal line, which is this thin dashed line running through here within the trade channel. Once the dynamic trend bands do one of 3 things. It's so simple. They're either spreading a 1.5 or less before the crossover, because these crossovers are very powerful. Once those occur, you get a move in that direction, I'd say about 80-85% of the time. Very high odds. So we can front run that a little bit if they're getting ready to cross over by a spread of 1.5 points on mini NAS on the dynamic trend bands. The way you measure that is you set your cursor right here and you set it to crosshair. See that? You have to set your cursor on your chart to crosshair. Once you have it in a crosshair, it'll look like mine scrolling across here. So you put your crosshair right on dynamic trend band number 2, and you see that it's trading at 85.25 right here. And you pull it down here and you see it's 83. Well, that's more than a point and a half, right? If you put it right here on this candle, it's trading 85, and dynamic trend band number 1 is 84. That's within a point and a half. Well, after a new trade channel opens, Boomerang is going to mark a pullback the signal line up to 6 candles from the new channel opening. You do not want to take a trade after the 6 candles have gone on. The only condition for doing that would be if you get, there's 2 conditions for that, and it's very, once you memorize this and learn it, my God, it's so simple. If the candles have all gotten, 6 candles have come and gone, and you didn't get a pullback to the signal line with that pinching together a point and a half or crossing over, then if an occurrence happens where they do cross over, like right here, and indeed the third condition, they're either a point and a half spread apart, they've crossed over, or they're matching colors. Those are the only 3 conditions. But if 6 candles have gone off after those conditions have been met and you didn't get a pullback to the signal line, then you can trade a pullback to the Cobra, which is this dotted thicker line running here. That's called the Cobra line. It kind of front runs the dynamic trend band number 1 and number 2 by a little bit usually. And it gives you an additional indicator to watch. Okay, so is that clear? If 6 candles go off and there's no pullback signal line and all the conditions are met in the dynamic trend bands, then you simply wait for a pullback to the Cobra within a few candles of the crossover. You don't want to get them way up here. It's not, the rule is designed that right after the crossover occurs, if there's a pull, like if this candle here had come down and hit the Cobra, that would have been a buy. Or if this one came down, that one probably would have been okay. But if you don't want to get more than maybe 2 or 3 or 4 candles away from the exact candle that they crossed over on, which is right here. Okay, the final thing is, it's brand new. I just introduced it. It's called the trend trading method, and that allows you to take an additional trade if there's a price surge, which is what's going to cause this. The dynamic trend band number 1 crosses over the Cobra, and as soon as it does, if there's a pullback to the Cobra, you can take that trade there, which occurred right here. See, they crossed over here, pulled back to the Cobra at 98.25, and up they go to 45.05 for a 7-point leap to the upside. So there's your first winning trade on this day using the trend trading method. The 2 trading methods that are described, the second one, which we'll get to ideally, we'll get a setup that'll show that, is called a second level move, and that's when you have a big trend move in one direction and you get a counter move in that direction, and then a pullback or a reversal back into the trend. And I'll show you those in a minute. I don't know, by the way, I have never gone back and looked at all these sessions. I've traded them, but I don't remember them certainly. So as we go through them, it'll be the first time I've gone through them myself. So there's your first Boomerang trade right there. Now the market gets all weird and choppy. It tries to make a second level upside move, but it's sell channel, buy channel. It's not a bona fide trade until you get the trend bands matching and getting ready to move back up again. It's kind of wild here. One could argue that there's a counter move here, and this is a counter buy channel, and they buy this here at 175, and certainly that trade worked out. But really, it's a lot of whipsaw here. If you bought them there, then you made money. It's a good deal. But generally, sell channel, counter buy channel, counter sell channel, yellow dot, blue dot. This is a whipsaw phase. You most likely are going to want to stay out of that. So here then you have the dynamic trend band number 1 crossing under dynamic trend band number 2. Well, what was the rule that I just told you a minute ago? That's right. You can trade a sell channel if the dynamic trend bands have crossed over on that side. They're spread within a point and a half from the crossover, or they're matching colors. But you always have to have the dynamic trend band number 1 match the same color as the sell channel. So here's a sell channel coming in here. And what's happened with the dynamic trend bands? That's right. Dynamic trend band number 1 is crossed over number 2. Therefore, on the next pullback the SIG line, which is right here, at 45.04, you go short. 45.04 comes down to 4,575, giving you exactly 3.25 point move there. So you just barely squeezed out a 3-point move, but indeed a winning trade. And if you sat through that and didn't quite get it and you sat through it, 4 got shot up to 775, you're still in the trade. So you're not stopped out even if you did hold this. And then finally they came crashing down and gave you the 3 points right in this candle here. So a little bit of pressure on the trade if you missed it. Catching 3 points here, not a big deal. So as we move forward, you see here we have a condition where you have a buy channel. Prices have moved up above dynamic trend band number 2, which is flattening out, which is just a normal common sense rule that you want to see dynamic trend band. You don't want to, one of our rules not to trade against a steep dynamic trend band. It's flattening out. Price have moved above it. Indeed, they went up and tapped the Bollinger Band, another good sign. And at this point here, you have the dynamic trend bands matching color and crossing over. Now, because they shot up right from here, 1, 2, 3, 4, 5, and this one was a whopper here, 4.25 jumping all the way up to 875. So this was almost a 5-point candle here. You technically could trade a pullback the SIG line, but it formed kind of a fat channel. All you want to do with the dynamic trend bands matching is just trade a discount off of that. Don't just go right at the signal line, although that trade would have panned out. 6.25 pulled back about 3 points and then shot up. But ideally, you just get a little bit of a discount here, maybe go long at 5 or something. Just not right at the signal line necessarily, but just try to get a little discount. You'll learn this after you've been trading with Boomerang a while, but everything's matched up here. Go long, or the Cobra is good, and up they go. So there's your third winning trade in a row on this particular day. Market got really slow as it just slow ground higher, as we've seen a lot lately. When the riggers come in, they'll do that little trick where they'll slow grind the market. It's very hard to get in sometimes. However, what do we see that happened here? And that's why I developed this new rule. It's called the trend trading method. You have a crossover as this buy trade you took here shot up. You also notice that there was a crossover of dynamic trend band number 1 over the Cobra. Therefore, you buy this pullback to the Cobra right here, 1375, which shot up to 1825. So there was a 5-point move off the Cobra to shoot up higher here. See that? And that completed the day for you with, I think, what was it, 4 winning trades for the day. Now, if you're a 4-contract trader, you're moving at, after commission, around $230 or so per trade times 4. That would have netted you a $920 day after commission. Not bad. If you maintain your regular job, you go to your job, I don't know if you make $920 in a day, but you could have with Boomerang. That's a pretty good deal. And you wouldn't have had to drive all the way over to the work and, sit there with the boss looking over your shoulder and making sure you're working hard enough, etc. We all know how that is. I know. I was in the corporate world for 20 years, wearing a suit every day in my Rolex and driving my Cadillac and making 100 sales calls a day and going out and seeing people and having meetings and taking people out to fancy lunches and closing those deals. And it was fun, and I miss it, but I was a lot younger, and you got that youthful exuberance. You can tackle stuff like that a lot easier. You get a little older, and it's like it's real nice to stay at home and not have to compete with all these young kids coming in that want your job if you're an upper level management guy or whatever, or gal. See what I'm saying? So stay home and trade Boomerang. Here's the market opening. I'm going to speed up a little bit now so we can get through our webinar. We won't take too long today, but I want to get into the Q&A session. Here's Boomerang opening up right here, and the market starts spilling off. What do you immediately notice here? And based on our 3 rules for taking a new trade. That's right, the dynamic trend bands are matching color. So all you got to do is trade a pullback signal line, boom, down they go, 3 points. On a small account, $5,000 to $7,000, small account, not with today's margin, but that'll disappear ideally when the Brexit thing settles down a little. You'll get your margins back to normal. You just made $230 after commission here. You're starting the day off. Now what happens? Market starts selling off. They're really going for it. Well, what's the first thing you notice here? Let me fan this market out a little bit here so we can see it better. I always like to keep things nice and open. I've been on so many webinars, and these guys scrunch their charts up, and my attitude is, hey man, what are you hiding? Because that's what they're actually doing. When they scrunch the chart up, they're trying to hide where their actual entry and exit was, just trying to razzle-dazzle you. Don't let it happen. Okay, so another quiz. What are we looking for a trend trade? Well, it occurs right here. The dynamic trend band number 1 moves under the Cobra, kind of sneaks under it real slowly, but then when the prices spike down here, it gets going a little more obvious here, isn't it? You see that? Right here, they're just kind of slowly sneaking down, and then right here, they come right up here and here and here and here on all 3 levels, but we take the first one, comes up and taps the Cobra at 96.5, and they come sliding down all the way to 86.5 at this point. There was a 10-point move here in the trend trade, and you're already in a trend. So if you catch that fairly close to the crossover, 3 to 4 to 5 maybe up to 4. This one occurred. I know they're crossing right here, but they're still smushed together. When it's really obvious that they've crossed, you got candle 1, 2, and on candle 3 they ran up and hit the Cobra, and then they fell back over 10 handles, actually over 13 handles, and continued lower. So these trend trades are very powerful and very reliable. That's why I recently introduced them to Boomerang Day Trader, making our Boomerang Day Trader even more exciting with more trades and more opportunities to make money, because that's what it's all about. That's all we care about, making money. Who cares about the rest? It's all just analyzing the market. That doesn't pay anything unless you do it in conjunction with Boomerang. So learn how to analyze the market with Boomerang. Put on the trades that Boomerang tells you to use and make money. So here comes the next trade. After a big downside squash on the downside here, always remember, after a larger move, and this indeed was a larger move, prepare for whipsaw at the end of that move. Don't just jump in long because the move appears to have ended. And the way you can tell it's ended is you'll see prices start crossing over dynamic trend band number 1 and then number 2. But usually when that happens, there's usually going to be whipsaw on that crossover because the bears are still trying to get on the short side on the reversal, and they were correct in terms of this move here. But all you're doing is waiting for what? One of 3 conditions. What are those conditions? A little quiz here for you, another little quiz. That's right. You have a buy channel, counter move. You have the dynamic trend bands within 1.5 points each other, or crossing over, or matching color. Now it's still a little early here, but I'll just show you what happened. Buy channel, first pullback is right here at 77.75. They came down to 75 quarter. It was a little whipsaw here, and you even got a counter sell arrow, but that doesn't shake you out of the trade. You got the crossover, stay on that side, and 77 shot up much higher for 3 points. 2 winning trades in a row, and you've now got yourself $400 and 60 bucks in your pocket within the first little over an hour. Yeah, about within the first hour, got 430 bucks in your pocket. Now, here's a market. You got a wide spread in the dynamic trend bands, which is a sign to be a little careful because they may trend, but it's not going to be a straight up path. The straight up paths or straight down paths, as you see here, is usually when you have a tight channel formation on the dynamic trend band. See the difference here? And look at the difference here. Yeah, they're shooting up in the dynamic trend band number one across the Cobra, but that doesn't always mean just because it crossed the Cobra you take the trade. You have to look at things in terms of a trend. You got to look at some other things which I explained in that video I showed you here. I'll put it back on the screen. Go over to boomerangtrader.com and watch this video. Boomerang Trend Trading Method. I describe other things you would want to watch for to make sure that the trend's on that side. Even in spite of that, when they did cross over, the first pullback to the Cobra right here, 92 quarter, did indeed shoot up to 95.50. So it just barely eked out a 3-point gain on that jump. But this is not a trend trade because look at the channel. Look at the wide spread here. 5 points or more is usually rule. 80 and 88. There's an 8-point spread. Oh my God, there's an 8-point spread in the dynamic trend bands. That is going to fade. That higher move is normally going to fade when the spread gets that wide. It's not going to continue until there's some adjustment or what I call neutralizing of the market by price movement. And that is what exactly occurred here as the prices dropped from the 96 area down 10 handles to 86. There's no trade here, is there? No, of course there's not, because you don't have a tight spread for a crossover on the downside, and you don't have the dynamic trend bands matching. Indeed, what they did, don't worry when this happens, it's great because you just keep your eyes open for the trend bands to match color like they do here. You got a new buy channel. Now the DTBs are matching color. It traded pull back the signal line here or here, and they shoot up for 3 points, giving you your fourth winning trade in a row. So here we go again. I'm going to speed up a little bit. Here's the dynamic trend bands. New sell channel coming in here, but we got to have that. We got to have a, first of all, dynamic trend band number one has to be the magenta or the reddish color, and there has to be a spread of 1.5 or less. So right here it's 3 1/4 by 2 1/4. That's fine. There's just one little problem. We did not get a red dynamic trend band until the market fell off the wagon. So it was a missed trade. No big deal. No big deal. So here we go. They start flipping back to the upside, and you've got a mismatched dynamic trend bands, a wide spread between them. Nothing to do here. Just customary whipsaw occurring later in the mid-session, later part of the mid-session here. Keep your eyes open because all of a sudden, here comes a new buy channel. Here's the dynamic trend bands matching color here. Here's a pullback to the signal line, and they shoot straight up for your fifth winning trade in a row. And coming in the final hour, usually you're going to want to avoid that. So you can see the dynamic trend band, the method that we use is always going to offer you trading opportunities. Now, admittedly, the last 2 days we've had a contracted market because of the FOMC, or not FOMC, I mean the Fed testimony. But I'm going to go to today's market as an example and show you what actually happened. Even though that meeting was going on, it was the second day of that meeting today, the markets were admittedly a little contracted in the morning here. There were still plenty of opportunities to make great money trading with Boomerang. I'll keep this nice and widespread so you can see everything crystal clear, which is the only way I do things, which is called, hello, honestly. There's a lot of fraud in our industry. I'm embarrassed to say it. Some of these guys, I just want to hunt them down and strangle them. There's some real jackass frauds out there. We're not one of them. Everything's honest, and we're the only system in the industry that guarantees 90% winning trade setups. So if you are looking at another system or something, just ask them, well, do you guarantee 90% winning trade setups? And they'll go, what are you, crazy? No one does that. And you'll know where to go after that. we're looking for what? A 1.5. We got a sell channel, so we started looking at the dynamic trend bands. That's all we do. Nothing else. You don't have to flip out and look at 20 other things. All you're looking at is the dynamic trend bands. Are they spread a 1.5 or less? You got prices below dynamic trend band number 2, which is flat. They even ran down and tapped the Bollinger Band, so it's telling you a new downside trend is trying to open up. So here's the spread. 850 right here and 7. That's called a 1.5, right? Isn't 7 and 850, that's a 1.5? Right, so right there is a pullback the sig line, and down they go for your first winning trade of the day. Now here, this was today. So here's the market trying to jump higher here. And you got all the dynamic trend bands matching, but unfortunately, when the arrow fired opening the new buy channel, the DTB was still the magenta color. Everything was kind of mixed until they shot up higher, so it's a mistrade. However, good old trend trading method here. Look at see the spread, how that's a lot tighter. That's what you need. You need a tighter spread, ideally pretty soon after a crossover. But look at that. The number 1 crosses a cobra. They pull back right here, here, and here to the cobra, and definitely here, and shoot up and give you your second winning trade in a row. That's why I introduced the trend trading method. A lot of times this will happen where the exuberant bulls or bears, but in bulls in this case, come in and just shoot the market up, walks away from the boomerang opportunity, but you just watch for the nice spread and the market climbing in this case, pull back to the cobra, and they continue higher and give you your second winning trade in a row. Same thing here, new sell channel. So you go over here and you say, well, what's the spread on the DTBs? Is it a point? Are they matching color? Have they crossed over? Or is it a 1.5 or less? Well, right on this candle, the spread is 31 by 32. It's only a point. So that tells you can take the next pullback the sig line, which occurs right here at 23. There was a little pressure on the trade up to 26, but you got a 5-point stop that you're working. That's what we automatically put a 5-point stop on. You hold the trade, and down they come for your third winning trade in a row. Now we finally come to what I was looking for earlier, one of our classic boomerang trades, which is the 2-trade method, which again, you can review the trend trading method and the boomerang 2 trading method for ending trades. That's all there is to it. Exactly what I'm showing you on the seminar here. That's where you get a trend move going. The bands aren't spread 5 points or more. You don't want that. You want them a little tighter. 5 or less ideally. And then you get a counter move with the arrow printing and locking down. Maybe you get some buy dots. It's not a buy trade by any stretch. Then you get a counter move. Once that occurs, you look for the next yellow dot to trade, as long as they trade within close to that yellow line. Sometimes they'll occur right on the signal line arrow, the new channel arrow, or shortly after. But if they just fall off the wagon, like you can see here, right when that candle opened, they're at 44.05 quarter, and they drop straight off to 92. 13-point drop. Don't take this next sell. You missed it. Well, you didn't miss it. The market just fell right off the wagon. This is a fat channel. If you turn your head to the left, you can see the fat channel there. We don't trade at the bottom of fat channels or the top of fat channels. Just wait for the next trade setup. No big deal. There'll be another trade. And sure enough, because that's what we do. We're paid to sit and wait. At the office, if you sit around and play video games or look at the websites and watch some YouTube video, your boss is going to kick your ass out of that job, right? In our job, our boss, namely the market and Boomerang, does the exact opposite. It pays you to sit and wait. You can watch videos if you want, watch some music videos, check the news, whatever, but you're paid to sit and wait for the exact Boomerang setups. If you're too hyper to trade, you're going to lose a lot of money. You don't belong in this business. You got to wait for a proven method like Boomerang that we have and trade it. What do you have here? Right when this arrow prints, the new sell channel opens and then it locks down because the next candle print. What do you have here? Another quiz for you. That's right. You have the dynamic trend bands crossing over. Not only are they're not a point and a half spread, they're actually have crossed over. That means immediately you can take the next pullback, the signal line, which occurs right here, and the prices shoot straight up. See what I mean? You've already made like 800 bucks today. I forget, I lost count. 800, 900 bucks already. You can stop trading for the day if you want. No shame in that. There's no trade here because the spread is wide. There's nothing even close to a crossover coming in here. So you just ignore the trade. Now it goes into full whipsaw mode as you come into the final hour. This is today's. So you probably just want to avoid this final hour. But in a quick review of today's trades, there's plenty of trading today. You just had to wait for the right setups. 1, 2, 3, 4, 5 winning trades, and then the final hour choppiness. So 5 winning trades times 230 bucks, 1150 bucks after commish. That's Boomerang Day Trader for you. Now, if you'd have traded 8 contracts, you would have been up $2,600. If you're like some of our traders, power traders, 10, 15, 20 contracts, you're up 3 to 5 grand for the day. That should be your goal, to aspire for that. So with that in mind, I don't want to run too long here. This is a recording that I'm making for you now, and I'll be more than happy to answer any questions you have on Boomerang Day Trader or any of the things we talked about here. Well, guess what, everybody? I had my mic on mute, and I apologize. However, I did record this, so I apologize for that. So again, use the economic calendar and just beware of what's going on every day in the market. So last week, I'll go back to the 14th here, FOMC meeting begins, then the big announcement at 2 o'clock. So I'll go back here over the 14th and the 15th of last week. And then the option expiration that Friday. So it's just a weird week. It's nothing to do with Boomerang having more or less trades. It's just the market environment. It's a rainy day, and you want to sell candied apples. You're so excited to sell them. Well, don't. If you look at the weather forecast, hello, you're going to sell candied apples at a ball game. You have to be patently aware of the weather forecast every day, because if you're going to go out and buy 200 or 300 apples and expect to really clean up, your net cost in that with the sauce and everything is maybe 50 cents. You're going to sell them for $2 or $3, and you're going to sell 300 of them. You're going to make some good money, right? But if you go out and buy 300 apples and you didn't check the weather and it's expecting showers this weekend and you got the big game, it's going to get called off. You see what I'm saying? Common sense. You got to know what's going on. So 14th and 15th, isn't that what we said? Yeah, so last week, okay, so here's the 14th and the 15th. Just common sense. You have to know your environment, your business environment in the trading world. Here's the FOMC meeting, and I always call what I call the Fed cheerleading squad. Whenever these meetings, they come in, start as the market starts opening, they're all gathering for the FOMC meeting. Here's the opening. This is a West Coast chart, so it's 6:30, and what I call the Federal Reserve cheerleading squad. It's the riggers gone. It's the riggers on steroids. They're going to try to pump the market up. All hail the chief. The Federal Reserve meeting is starting. Let's ramp up the market. It happens all the time. If you go back, use the calendar, the account of day calendar, and go back over 3 months. If you're a researcher like me, you'll do this. Go back over 3-4 months of FOMC meetings. You might have to go back 6 to get a good sampling. Watch all the time. The Federal Reserve cheerleading squad comes in. It's so phony, and they ramp the market up. Now, obviously, because the market was bearish here, and I was calling that in my room a bearish bias, they hit him on the downside, and the riggers didn't like that very much, but they hit him on the downside. But there was plenty of trade. This got missed here, but there's nice selling here. Here's the second level, not second, well, it's a second level trade too, but it's actually the trend trade right here at the Cobra, dropping down for another trade. Here's a second level trade short here, and there's even another one down here, but you wouldn't have taken this because it didn't reset the pattern. You didn't get a full cross over here, so you're just waiting. So 3 trades there. You can see it's beautiful, even with the Federal Reserve meeting. But look at how full of whipsaw and all this. Here comes the cheerleading squad trying to pump them up again, and they were still struggling, but they somehow managed to hold them up. And then when they usually can't hold them up, they'll wait to the end of the session, then try to pump it up. And that's exactly what they did here coming into the close. But during that mid-session period, it got very choppy. On these sessions, the FOMC meetings don't expect much. Now, here's the next day. But there were 3 or 4 trades there in the early session. Here's the next day here. You see? This isn't Boomerang's fault. This is called the FOMC meeting, and this was the big day. The first day is one thing, but the second day, when they have a stated and announced FOMC announcement where they're going to announce what they're going to do with interest rates and all these forecasts, then they're going to give a special forecast, and they're going to even have a press conference. That's out of control. It's just way out of control. Speculation gone wild. Everybody's guessing what they're going to say, hanging on every word, which frankly disgusts me because I watched them develop this whole Fed worship crap from the Alan Greenspan years when I was first trading. It was never there prior to that. They developed it into this, Fed worship stuff, which I think is really makes everybody into sheeple. Anyway, you can see here, there's no trades here. It's all whipsaw just going on here. Stand aside, 3-point candles spiking up, 3-point candles spiking down. It's all whipsaw until you get to right here where you get the crossover, the matching dynamic trend band. See here, they're not matching color. Here they're matching color. You trade a pullback sig line and down they go. But it took an hour for the market to sort itself out. And then you had the same thing here where you had the colors matching right here, a pullback the sig line, and a 3-point move up here. Here they fell right off the wagon, which is typical, and don't trade these days usually. Just stand aside or try to catch some trades in the morning if they happen, first 2 hours of trading or so. But don't keep trading because it's going to be real strange and full of whipsaw as they get close to the 2 o'clock time, which occurs right here. 2 o'clock, they come out with their announcement, and look right here is 2 o'clock. Look at how it just goes wild. Starts flying all over the place. You don't want to be in that stuff. Then they coming out with their conference meeting here, and then the market just randomly sold off at the close. Again, the underlying bias was bearish. I had called that in the room that day, and they just couldn't really ramp them up like they usually do. So I hope that answers your question there, Reggie. We have had the last 10 days period has been the FOMC meeting on the 14th, the announcement day on the 15th, another day of trading, which everybody was still kind of baffled by what it all meant, then option expiration with a quadruple option expiration on Friday. I completely stand aside on those days. I haven't traded those in 20 years. I just avoid them because they just kind of, it's not a normal day in the market. It's a rainy day. You want to sell apples, but it's kind of drizzling. Maybe it's not pouring rain, but it's drizzling. You go, should I go or shouldn't I go? Well, they say the game's still on and they're going to play in the drizzle and hope that it dries up. Well, I don't know. Instead of bringing 200 apples for a hot, warm, sunny day, I'm going to make up 60 of them and see if I can sell them. Because if they don't sell, the apples will rot in 2 days and I lost that money. You see what I'm saying? So that's how I treat the option expiration date. I just avoid them completely. It's drizzling out, the weather's not good. Here's this week, and like I said, you have this one day on Monday. Then you have the FOMC meeting starting right here. Or no, this was the testimony, I mean, yesterday. And today, tomorrow is the Brexit vote. It's going to be nuts. Do you really want to trade? Be careful. Boomerang will give great setups, but when you have these kind of conditions, and same with Friday, who knows what's going to happen on Friday? They've increased the margins. When you get a notice of margin increasing because of the fear of volatility, all these things are messages to be careful and don't go in and expect Boomerang to just, roll merrily along, although it will. I just showed you today's results were fantastic. The previous day, same thing. Even though these testimonies are going on, the trades are there, but just be a little bit more willing to stand aside. Anytime the Fed's involved in the market, just be willing to stand aside. Let me see what other questions you have here. John, on that question, just send me an email and I'll be more than happy to answer it for you. I don't spend time on the webinars with that. Although, it's a good question, but I have actually a special email that I'll send you about that information. He's just talking about a technical thing with his chart, and I'll be more than happy to show you what to do with that. Crude oil is great. Crude oil charts, they're always, see, that's the thing with crude oil. You don't have Federal Reserve meetings. You don't have all that stuff, although they might affect it a little bit here. You ask how it's doing. It's doing what all it does, trades. Boomerang has 97% winners on the last audit I did for crude oil. Unbelievable. So you're still going to get a very high percentage of winning trades. It's just a matter of if you want to trade that contract. Just remember that every month or so, the contract rolls over to a new contract month. So you have to be very active in watching the volume when that contract's going to change. I'm waiting for the contract to trade now. It's loading it now. Let's see what happens here. Be more than happy to go over some of the crude oil trades, but might take a second here to load. Anyway, so okay, there we go. Now again, this is all going to be a little bit different. So we have to, just to make the chart look right, I'll lift all this up. There we go. Crude oil is very effective on Boomerang. You just have to be fast and know your market, like anything. But it absolutely works unbelievably. With Boomerang, what you're mainly looking for is matching dynamic trend bands and matching trade channel. It's going to start trading about 5 o'clock is the really active period on the California time where I am now. So you can watch just before about quarter till the hour. They'll start zooming around. You can trade them pre-market, but just be careful. But the secret for trading Boomerang and crude oil, watch for matching dynamic trend bands and a trade channel in that area. It's a lot smoother than mini NAS usually, or very smooth, but you're not looking for the 1.5 spread and all that. So you're just looking for everything to match up. Trade the pullback signal line using a 12 tick stop, so 50-20 goes up to 24, and you're looking for an 8 to 10 point scalp. There it is. No matching dynamic trend bands here, nothing to trade. Look how smooth this is. Crossover, matching dynamic trend bands, a pullback to the signal line at 06. No pressure at all on the stop hardly. And up they go for another 10 ticks. So you got 20 ticks so far on this day. This was 6-7. Again, just wait for everything to match. If they don't match, just forget it. Just wait for the matching. Nothing matching here. They're just shooting higher. Nothing matching here. It's got to wait. Here they're matching. Pull back the signal line 9. Goes down to 3, 6 tick. We're using a 12 tick stop and looking for generally about a 10 tick gain. Here's your, I think, third or fourth. I think fourth winning trade in a row here. And then they end them. Same everything. It's same old routine, A chart is a chart is a chart. And following the boomerang method, you'll get a lot of winning trade. Here's market real choppy. Same rules. It's whipsawing around, going wild. Nothing to do except here you get a sell channel matching DTBs. Pullback signal line at 5102 and it goes down to 94. So I say 8 to 10 ticks. That's what I wrote in the rules. And you can read that. Let me show you that. There it is. Successful crude oil trading with Boomerang Day Trader, 97% winning trade. This was an audit I did recently on a period here, and I explain all the rules for trading with crude oil. Basically, it's 12 ticks, very tight stop, and an 8 to 10 tick gain. Normally 10, but you might, it's a fast market. You might get a little slippage on the entry. Just kind of monitor 8 to 10 ticks. Get your finger up here on the trigger and your cursor, and then just hit them. Look at this, matching dynamic trend bands, everything in sync. Buy them, up they go. Now here they're matching, but a little bit late. You could have used the spread rule here if you wanted. And down they go. Here's another one, sell channel, same matching colors, 10 ticks. Instant 10 ticks. Same thing here, crossover, matching colors, another 10 ticks here. This is kind of a choppy whipsaw period. If you had traded this one, 24 shot up to 31, just barely eked out 7 ticks. Might have been a riskier trade, but you see the smoothness, how different it is. Sell channel, matching colors, pullback signal line, 10 ticks. Second level trade, same rules there. Second level trade, sell at 83, and they come down to 67. There's a little pressure against the trade there by about 7 ticks. No big deal. 12 ticks is a stop. Here's the crossover. Pull back the signal line. 10 ticks. Nowhere near the 12 tick stop. Second level trade. New buy channel. A little bit riskier trade because of the whipsaw. Still worked out, but I wouldn't have taken this trade. I'm all about putting number 1, risk reduction. Number 2, trading, thinking you're going to make some big money. That's great. Cut the risk back and you'll see that the winners will work out by themselves. Crossover, sell channel, pullback signal line, 10 ticks. This one, matching dynamic trend bands, a pullback the signal line, 10 runs 22, 12 ticks. No pressure on the stop. If you had some slippage there, just go for 8 ticks, maybe even 6. Just depends on becoming very expert at the market, like everything with Boomerang, everything with trading. This is crude oil. I'm going over some of the crude trades lately. 450 as they come into the top of the hour. Here's a second level trade here. Choppy as they come into the 5 o'clock period. Nothing to do here when all the trend sell channel, trend bands matching, sell short, 10 ticks. Crossover, buy channel, matching dynamic trend bands, pullback signal line, 10 ticks. Same thing, except here, nothing to do here. Whipsaw, buy channel, matching dynamic trend bands, a pullback the signal line, 60 runs 69. That 8 tick thing here, it kind of, it's a little tricky, but 60 pulled back. Even if you missed it, pulled back to 53 and then shot up, but you would have wanted to been out of this thing once if you missed getting out on that fast move, just get the heck out. Matching dynamic trend bands, we missed this, but the Cobra rule, that still applies. They crossed over and it missed, but you want to get 3 to 4 or 5 candles at the most from the crossover. No trade here. Nothing to do here. This is a strong drop here. You don't want to trade them down here. It ended up being a winning trade, but you don't want to trade that usually. Whipsaw going wild here. However, crossover, buy channel, matching dynamic trend bands, pull back the signal line at 52. Up they go to 66. No pressure, hardly. Well, let's see, on the stop, there was 5 ticks of pressure, no big deal. Let me do one more session, then I'll get back to the Q&A here. 5 o'clock. 450 ticks. Use the 450 ticks. It's so accurate. No need to change it or try to adjust anything. Nothing going on here. Just all hyper markets. Crossover, pullback signal line. Straight down they go. Whipsaw, forget it. When they start jumping around like this, no matching trend bands anyway. Just wait. Here they are. Buy channel, matching dynamic trend bands. Pull back exactly the signal line and shot straight up. It's beautiful. Boomerang's beautiful for crude oil. Second level trade, matching dynamic trend bands. Pull back the signal line. 86 shoots up to 97. Matching, you could use the crossover rule here. Just wait for them to match. Here's where they match. 75 drops straight down to 65. See that? Just scalp away. Second level trade, new sell channel, matching DTBs, 10 ticks more here. Market getting hammered on the crude. They're crossing over, but it's, after a big move. Remember the rule, big giant move like that. Don't expect them to just reverse right away. Although they're matching here, pullback signal line came at 30 and they jumped up to 38. There's your 8 ticks, but generally this is going to whipsaw first and then the market will decide. It decided to keep going lower, matching dynamic trend bands, pull back the signal line here and crunch, down they go. So that's crude oil for you, and it's beautiful. Just go in there and trade it a little. I'm not skipping any losers, Craig. There weren't any losers. If you know the Boomerang rules, there weren't any losers in anything I just showed you. If there were, I'd be more than happy to show them to you. Now, if you aren't familiar with Boomerang and you want to imagine that there were losers because you're just seeing stuff here, if you don't know the rules, then it's impossible for you to know if there were winners or losers. I'm showing you based on the exact rules. So by saying I'm skipping losers, you're implying that I'm making this up, and that's not going to go over very big with me. So they appear to be valid trades. Do you have a time that you're referring to? They're not valid trades. If they were, I would have given them to you. They're no valid trades unless I gave it to you. Some of the trades, like I said, are whipsawing. You don't just take them like a robot. You want to wait and see what the market's doing and become expert in the market. Like this first one here blasts higher. This one here technically was a buy too, and it panned out. Like I said, 86 ran up to 96 exactly for 10 ticks, but that was a fast move. If you had slippage and they ran up right into here, you would have maybe had to jump out of the trade. But I wouldn't have even wanted to take this trade because it would have been a little bit tricky, but it did spread out and give a 10 tick move. Again, you're coming in here learning to be an expert with these, and you're going to want to take them and become expert in the contract that you trade. Again, all the trades that I showed you were winning trades that were based exactly on the rules. I didn't skip any trades. I'm more than happy to show losers, but there aren't any. See, that's the thing. People find it hard to believe because they're so used to either con artists that are trying to show a system that really isn't that good. And here's how they show you. Tell me if I'm right or wrong. Here's how they show their trades. Okay, well, right here, when it went long, I see this all the time where they scrunch up the charts and they know they're scrunched up. How can they even themselves trade a chart that's like, say, on the far right side of the screen? Okay, well, we got short here and they got their little thing on there, and it's ridiculous. Anyway, our Boomerang users are familiar with the rules. If you become familiar with the rules and buy Boomerang, you'll be able to make a lot of winning trades. It's a great deal. But if you don't know the rules, you can't say whether the trades were winners or losers. I'm only picking out the ones that follow the exact method and rules. I know it's a little shocking when you see that they're all winners. That's because you're used to losing yourself in your personal trading, or you're used to going to con artist webinars where they just make stuff up or they don't hardly have any winners. And because of that, a lot of that's psychological too. We get traders that actually get mad at me because they're so used to losing and they're suffering. They come to our webinars, they see how many winners we have, they get mad. it's either jealousy or they just can't believe it because they're so accustomed to losing that it pisses them off that Boomerang day trader guarantees 90% winning trades. So if you buy Boomerang, you have a guarantee of 90% winning trade setups, but you have to learn the rules and learn how to follow them exactly. And then, of course, you have to know a little bit about the markets, or at least have some skill in the markets. It's like any skill or business. You don't go to the gym for a few hours and then sign up for the Olympics. If you're going to do that, you have to practice. So if you're going to want to build up to being a 20 contract trader, you don't want to do that in your first year of trading. You build up your skills at trading and using Boomerang, and then gradually be able to do it. So, but it's not a problem at all. You just, if you come to these webinars, I'll have this recorded. You can watch, learn the rules first, and you can do that again. I already showed this, but it's right here on this for crude oil. It's on this particular trade. It's the same exact rules, except with crude oil, we don't concentrate on the spreads, on the crossovers. That's for the mini NASDAQ. The two best day trading contracts are the mini NASDAQ and crude oil. Gold is a little bit more erratic, and some of the other U.S. stock indexes, they're good, but you'll find that the mini NAS is unbelievable. ES is overloaded with a lot of hedge fund traders that aren't pure day traders. They're actually doing a lot of hedging on the contracts, so it'll be a little different. You'll get similar moves. But to learn how to trade with Boomerang, the first thing is to study the videos and learn how to trade. It's very simple. I've already showed these here. You can, first of all, study Boomerang, the two Boomerang day trader setups for entering trades. Those are the rules. There's only two of them. And then recently I added this is very recent, the trend trading method, which will add usually 1 to 2 to maybe 3 trades a day to your normal arsenal of anywhere from 4 to 10 to 12 Boomerang trades a day. So a great opportunity to have a job, go to work, and make a very nice income trading with Boomerang if you're willing to work hard, study the markets, using Boomerang as your guide, and just have the guts and courage to make those trades. And again, I designed this for smaller accounts. You can trade any amount you want. We have people trading very large size, making $200,000 to $400,000 a year, and we have a lot of traders coming in and trading smaller $5,000 to $10,000 type accounts, and everything in between. But just come in and learn the methods. You can come to these webinars for free. Then when you buy Boomerang and you open it up, you'll see it's all exactly the same exact thing that I'm showing you here in the webinars, and you can trade with precision and make a fantastic living. So with that in mind, here's a question. No, we have rules for a question about choppy markets. You don't trade in choppy markets, and Boomerang identifies choppy markets. And again, I'm going to end the webinar here because I've got to go. I've got some people coming to my house to do some construction, so I'm a little bit anxious to get that going. But we have all kinds of archives of these recorded webinars. This one will be recorded too. But right here, again, you have to study. You can't just look at the Boomerang charts and pretend that you know what the rules are. Study how to manage congested areas, whipsaw in the market. So if you're perceiving, that's a whipsaw area and you're skipping a trade, those aren't trades. We know exactly when congested whipsaw is occurring in the market. I can give it to you very simple, and that is it's done by seeing 3 candle spike moves occurring simultaneously across from each other. Here's a class. Well, this is pre-market, so it's not good, and I could show you NASDAQ better, but when you get a 3 candle spike and then a 3 candle spike in the other direction, or a bigger one like here, within 1 or 2 candles, Boomerang's telling you stand aside. It's whipsaw. See, this isn't a buy trade here because you're right in the middle of whipsaw. This is a nice smooth thing. You got to study the videos. That's the only thing I can tell you. If you study the videos, they're very simple. You'll not only learn how to trade with Boomerang and make a steady income, but you'll be able to manage whipsaw, and you'll have two methods that'll give you up to, I would say average of, on a real slow day, like we're getting these choppy FOMC days and all that, 5 to 12 trades on real busy days. And that's really controlling risk and everything there. So I really want to thank you for joining with us today, and have a nice rest of the afternoon. Minute I get off this webinar, I'm going to bring this up, lock in the recording, and you'll have this entire recording. If you missed it this morning or earlier because I was on mute, not even a problem. You can go ahead and watch that with my recording and my voice on there from the recording that I made, and you'll be able to watch everything that I showed you. So thanks again for joining, and have a nice rest of the afternoon.